At first, it seems simple. You earn, you save a little, you spend when needed, and you try to stay responsible. That is what you were taught. But what if that feeling, that constant sense of almost stable but not quite, is not random? What if it is quietly designed? Because banks are not just places where money is stored, they are systems built on behavior. And more specifically, they are built on predictable human behavior. Not by forcing you to do anything, but by creating conditions where certain choices feel natural, automatic, and even responsible. And that is where the real psychological trick begins. It does not start with debt. It does not start with interest. It starts with comfort. From the moment you open a bank account, everything is designed to feel safe. Your money is secure. Your transactions are easy. Your life becomes organized. And slowly, without realizing it, you begin to trust the system completely. You stop thinking about money as something physical, something limited. It becomes numbers on a screen. And when money becomes invisible, spending becomes easier, not because you are careless, but because your brain reacts differently. Handing over cash feels real. You see it leave your hand. You feel the loss. But tapping a card or clicking a button feels almost weightless. It doesn't feel like loss. It feels like access. And that small psychological shift changes everything, but it goes deeper. Because once money becomes invisible, something else begins to fade. Friction. Friction is what slows you down. It is the pause between desire and action. The moment where you think reconsider and sometimes decide not to spend. Cash creates friction. Counting it takes time. Physically giving it away creates awareness. It forces your brain to acknowledge the transaction. Digital systems remove that friction almost completely. One tap, one swipe, one click. And the decision is done before your mind has fully processed it. You are not being rushed, but the system is designed for speed. And speed reduces reflection. Now layer something deeper on top of that. Delayed consequences. When you spend using your balance, the impact is immediate. You see the number drop. But when you use credit, the impact is delayed. The cost exists, but it lives in the future. And the human brain is not designed to treat future consequences with the same urgency as present ones. Future problems feel smaller. Future payments feel manageable. Future stress feels distant. So the system quietly separates action from consequence. You enjoy now, you pay later. And later always feels under control, until it slowly begins to overlap with the present. One payment becomes two. Two becomes a pattern. And a pattern becomes your financial reality. This is where the illusion strengthens. Minimum payments. On the surface, they look like relief, a safety net, a way to stay in control. You don't have to pay everything now, just a small amount, just enough to stay responsible, but look deeper. Minimum payments are not designed to free you. They are designed to extend you. Because when the required payment is small, the urgency disappears. The pressure fades. The situation feels stable even when the total debt barely moves. Time stretches. And as time stretches, interest quietly grows. But you do not feel that growth immediately. You only feel the small, manageable payment in front of you. So you continue. Month after month. Payment after payment. Not trapped, but not progressing either. And that is the key. The system does not need you to collapse. It needs you to continue. Now add another layer. Personalization. Modern banking systems do not treat everyone the same. They observe behavior, they track patterns. They learn your habits over time, how often you spend, where you spend, when you are most active. And based on that, they adjust what you see. Higher limits, targeted offers, pre-approved loans. It feels like opportunity, but in reality, it is alignment. The system aligns itself with your behavior so that the next step always feels natural. Not forced, not risky, just slightly beyond where you currently are. And because it feels like progress, you accept it. Now look at something even more subtle. Emotional timing. People do not make financial decisions purely based on logic. They make them based on emotion, context, and timing. And the system understands that. Offers appear when you feel confident. Credit expands when you feel stable. Options increase when you feel in control. Not when you are struggling, but when you believe you can handle more. And that is when you are most likely to say yes, because it feels like growth. But growth without awareness can quietly turn into pressure. Now go deeper into something even more powerful: normalization. Debt is no longer seen as something unusual. It is part of everyday life. Buying now and paying later is not a rare decision. It is a standard behavior. And when something becomes normal, it stops being questioned. You stop asking if it is necessary. You stop analyzing its long-term impact. You simply accept it as part of how life works. And that acceptance removes resistance. Now combine that with something even more subtle: comparison. Every day, you are exposed to lifestyles that appear slightly ahead of yours. Better homes, better devices, better experiences, not dramatically out of reach, just close enough to feel possible. And when something feels possible, your brain begins to adjust toward it. I can afford this. It's not that much. I'll manage. And in that moment, your definition of necessary begins to shift. Not because your needs changed, but because your perception did. Now, layer something even deeper: identity. Over time, your financial behavior becomes part of who you are. You are someone who pays monthly, someone who upgrades regularly, someone who manages ongoing commitments. It no longer feels like a series of decisions. It feels like your lifestyle. And once something becomes identity, it becomes harder to question, because questioning it feels like questioning yourself. Now step back and look at the full picture: invisible money, reduced friction, delayed consequences, minimum payments, personalized offers, emotional timing, normalized debt, social comparison, identity attachment. Individually, each one feels harmless, but together, they create a system of influence so smooth that it becomes invisible. Spend comfortably, pay gradually, feel stable, stay consistent, repeat. It feels like control, but in reality, it is guided behavior, not forced, not imposed, but shaped. And the most powerful part is this: you feel free the entire time, because no one is telling you what to do. No one is forcing your decisions. No one is restricting your choices, but your choices are being influenced, step by step, in a direction that keeps the system running smoothly. And that is the psychological trick: not keeping you poor, but keeping you in motion, not blocking your progress, but regulating its speed. Because a person who feels stuck will resist. A person who feels successful will stop pushing, but a person who feels almost there will keep going. And that almost is where the system becomes strongest. Now here is the important part. None of this means banks are enemies. None of this means money is dangerous. The system itself is not built on evil intent. It is built on efficiency, predictability, and scale. But when structured systems interact with human psychology, outcomes are shaped in ways most people never consciously notice. And that is where awareness begins. Not in fear, not in rejection, but in observation. You start noticing small things. Why does spending feel easier digitally? Why do small payments feel harmless? Why does later always feel safe? Why does upgrading feel necessary? Why does stability feel like progress, even when nothing is truly changing? And in those questions, distance begins to form. Distance between you and automatic behavior, where you no longer react instantly, you pause. Where you no longer assume, you analyze. Where you no longer follow patterns blindly, you start to see them clearly. You begin to choose consciously instead of automatically, meaning your actions are no longer driven only by convenience or habit. And once you reach that point, something shifts. Not the system, but your position within it. Because the system does not disappear. Credit will still exist. Payments will still exist. Offers will still exist. Incentives will still exist. But now, they are visible. And when something becomes visible, it loses its ability to guide you silently. You can still use it, but you are no longer being used by it. And that is the moment where control changes direction. You are aware. And awareness does something subtle but powerful. It slows you down. It reintroduces friction. It reconnects action with consequence. It brings the future back into the present. And once that happens, your decisions begin to change. Not all at once, not dramatically, but gradually. More intentional, more aligned, more real. And in that quiet shift, for the first time, your financial life is no longer something that simply happens to you. It becomes something you actively shape, not outside the system, but consciously within it.